Hi everybody and welcome to the Payment Genes podcast series Voices in Payments. Today we are joined by Ian Johnson, and Ian is the Managing Director Marqeta Europe. Ian, a warm welcome to the show.
Thank you.
Ian, it's great having you. Ian, like I always start my podcast is with the question, I never met anybody who woke up one day and said, I'm going to be a payment expert. How did you stumble into payments? Because your background in payments goes all the way back to Ethos by Worldline and even pre-Worldline.
Correct. Yeah, I certainly fall into category of not somebody whose ambition was to get into payments, to be honest. So, as most young men in the UK, I guess my original ambition was to be a footballer, but I rapidly realised that I lacked the talent and the endeavour to achieve that. So, I started my career actually in international logistics. I was shipping parts for a nuclear power station in China way back when, because I'm that old. I got relatively disinterested with that, and just basically decided to apply for a job at Atos, not really knowing a huge amount about what I was getting into. But pretty much from the time that I started, I became quite fascinated by payments and actually just how dysfunctional payments were back then. It's a crazy situation where faxes were being used to update accounts and to make changes to bank systems, which was somewhat crazy. And it has to be said that up until I'd say being kind 6 or 8 years ago, if you told somebody at a party that you were in payments, you could rapidly clear the room as people moved away from you. And I don't know what happened, but somehow payments became much more interesting and exciting. I will not use the word sexy about payments because let's be clear about this. There's nothing sexy about payments, but it's certainly a much more interesting field to be in than it was when I first started. So absolutely stumbled into it. Once I was in there, I could see the opportunities, and really, I guess most of my career has been spent trying to work for companies that are trying to improve how payments happen, both for the consumer and for corporate organizations.
Yeah, it's an interesting development that payments become a hot topic. What do you think is one of the reasons for that?
I think with the advent of more and more online purchases, through e-commerce, I think as that started to happen, there became more focus on payments as part of that purchasing transaction, so that people were investing lots of money in having the best possible website, the best way of you making purchases, trying to streamline things as much as possible. And then you get to the end, and then there's this clunky, horrible payment experience. And I think that e-commerce disruptors in particular really focused on, how can we make this experience much better? And that drove more innovation in payments to try to make things more seamless. Certainly started on the acquirer and the PSP side, and then kind of more laterally on the issuing side, because pretty much up until not too long ago, as consumers, we would basically use whatever our banks gave to us. A bank would say, "Here's the product. This is how it works. Paper statements once a month." Forget mobile, that didn't even exist at the time. And when you were buying online, you just had to put up with the experience. If you wanted to buy something, it was just what it was. I think those e-commerce disruptors made a big change, and I think that because they drove trying to improve the experience, that drove payment companies, card companies, banks, etc., to try to improve the offering they were giving to consumers. And it woke us up as consumers to say, hey, this isn't good enough anymore. This rubbish that you've been serving us up for 15 or 20 years needs to change.
It won't stand anymore.
No.
It's quite funny that in recent years, through white label solutions, etc., the entire payment value chain has become less visible for the consumers. But still, they are much more aware of what's happening behind the scenes. So that's a very interesting development there.
Yeah, I think there's a few things to think about that. So, firstly, a consumer shouldn't have to worry about what goes on in the background. It should be simple. I always remember being totally amazed by Amazon's one-click purchase technology when that came in. I remember clicking it and going, that can't be it. And it was like, no, that is it. And I was like, that is absolutely amazing. That's seamless. That's how I want my payment experience to be. Um, I think the thing about having more of an understanding of what goes on in the background, that's driven by, because we've been buying more and more online, and there's been more and more talk about security and privacy of data. The people have just become a little bit more aware of the Visa and the MasterCards and the role of these organizations in how we pay. Far from having to be experts, but you would want to know, how what's going on in the background to a certain degree, because you're giving over
Yeah, a lot of data and
security, you're giving
security.
over highly secure information. So yeah, I think it's been a logical journey to get to where we've got to today. Take away the friction from payments, but hey, whilst you're doing that, make sure that my data is 100% secure.
Indeed, indeed. And just to make a small sidestep, because you joined Marqeta in January 2018,
I did.
and Marqeta is an online platform for card issuing, both virtual and physical cards. What was for you the main reason for joining Marqeta?
So I worked in payments for a long time. I've worked for some very big kind of organisations. So you mentioned Worldline, where actually I worked with a number of the colleagues that I now have at Marqeta. And I worked for another company in the US called WEX. And what I found was that, there was increasing opportunity in the payment space that required payment providers to be more innovative, more nimble, and more flexible. And I hadn't worked for an organization where we had the technology that could really address the opportunities arriving in the marketplace. And when the Marqeta opportunity arose, I was fascinated to hear more about, whether or not somebody really had revolutionized the way that card issuing takes place. Because I
What
was kind of,
surprised me, from my perspective, the issuing side of the entire payment value chain was perhaps least understood by everybody working within the industry, and it takes a bit more context to fully understand. Next to that, it seemed like the reddest of ocean, so fully saturated, already taken care of. So why did Marqeta jump into that red ocean?
I think the interesting thing is that our original intention as a company was to launch our own payment products, so consumer facing payment products. The original idea being a payment card that would allow you to have multiple Groupon vouchers and be able to have them attached to a card and then be able to go and spend them in a more simpler way. And what happened was that in building that product, which we had some success with and we worked with the likes of Facebook on, our founder, Jason Gardner, realized how difficult it was to launch an innovative payment product with basically what was out there,
Yeah,
the
the
tools and
infrastructure was not
infrastructure.
ready.
Yeah, it was terrible. So, if you consider a Bay Area company like Marqeta, surrounded by companies like Square and Instacart and DoorDash and Affirm, all of these companies who are all looking to push the innovation in payments and financial services forward. But when they came to do that, they were faced by legacy providers with very old technology, where the ethos of the legacy providers and the ethos of the kind of commerce disruptors was so different that Jason identified that actually the gap in the market was to grasp the nettle and deal with the essential tools and infrastructure and bring those to these innovators. Many companies of which, when we formed and made this pivot, didn't even exist. But he believed that as more and more disruption took place, more and more organizations would look to the likes of Marqeta to say, this is how we want to work. If we were going to build this capability ourselves, this is how we would build it. And that's what has effectively driven our success over the years.
Yeah, and the way that you've built it is substantially different than others. A fully open API platform,
Yeah,
which means that everybody can access it, everybody can work with your tools. But
correct.
on the other hand, it means your competitors get a look behind the scenes of how it works. So that's an interesting conundrum.
It was an interesting conundrum. I think the reality of the situation is the opportunity that exists from allowing people with ideas and innovators to build via an open API and to test their ideas far outweighs the risk of competitors seeing how you do things and essentially looking to copy those things. I mean, what we try to do is create a whole new category of card issuing. So we call it modern card issuing. And if modern card issuing is about being open and transparent and flexible, you kind of can't do that being hidden behind a wall or by being invite only. You have to be all in. And we're all in. And to be very clear, it's a huge benefit to us because very often in the conversation with companies that are looking to launch innovation, they've already been onto the sandbox, they've already built something, they already know that what they want to do is achievable. And therefore, the conversations are much more about timeframes and what else needs to happen rather than spending lots and lots of meeting time talking about and showing presentations about how a platform works. It's much better to be able
Yes,
to
you
use
once
it.
told a fantastic anecdote about having a meeting with, I think it was a French neobank, where you just joined Marqeta.
Yeah,
Can you tell us a bit about that?
that was the realization, I think, where I knew that I definitely made the right move. So I'd never been in a sales meeting like it before. So it was at a French digital bank. They had a couple of business people in there, and then they had two or three people from the tech side. And the two or three people from the tech side, which is not unusual for people on the tech side, opened up their laptops, gave a very brief introduction, and then spent the rest of the time tapping away. And this was so alien to me that I was in the meeting thinking, this is
Uh-oh.
not going well. These guys are not remotely interested in what this English person's got to say. But at one point, one of the developers just kind of put his thumb up like that. And then the business guy said, oh, that's the developers just saying that they've been into the API and they've tested a few use cases and it works exactly how it says it's supposed to work. So we're all good on that front. And I was like, wow, this is going to be the easiest job in the world ever. So, yeah.
This is regards regarding the show not tell, which you discussed a few times as well before. You have to have something to show. Everybody can talk the talk, but walking the talk in this way, making sure that people can already access the platform, that it offers huge possibilities.
It does.
It makes a sale as well. Sorry to interrupt, but I think it also makes the selling of your proposition totally different than normally.
100%. And I think one of the most interesting things is where we are in terms of 2020 and the payment spaces. There's no point any party wasting each other's time evaluating technology, talking about projects, only to find out at the end of it that there's just not a good match. Either the technology doesn't match the use case, or the particular use case, the technology company doesn't believe there's any real opportunity around in terms of scale. So this thing about show not tell is something that even the biggest consultants in the world, the big four consultants, are understanding that that's how they can engage better at boardroom level with tier 1 and tier 2 banks, with major corporates, which is, they've traditionally been organizations who can produce the best and most slick PowerPoint presentations in the world ever. But ultimately, at the end of it, you still don't know if this thing works and how it will work. And you can't touch and feel it, you can't experience it. So, we work with consultants on arming them with the tools to be able to go into a bank boardroom and actually demonstrate a transaction actually happening. Because these are things that in this day and age really resonate with people rather than tons of slideware, which still don't prove anything at the end of the day. I mean, as I've talked about before, you would not buy a car without being able to test drive it, quite frankly. And if you think that as a personal purchase for a consumer, a car is a big purchase. But some of the contracts that tier 1, tier 2 banks sign with technology providers are multi-year, multi-millions, if not tens of millions contracts, and often they are based on written proposals and based on case studies that they've got from previous customers. Very rarely is it based on, actually, we've already built against this open API. We know this thing does what this company is telling us it does. So great believer in that. And if you don't have an open API company, my view on it has always been, if the technology is as good as you say it is, make it available for people to try it.
Yeah, that totally makes sense. Perhaps a silly question, but that's what I'm here for. When potential clients are working around in the sandbox, already trying a lot of different things, when do you decide to flip the switch and say, okay, now we're going to talk contracts, start full collaboration, and as well start charging for your services?
So we let people build in the sandbox indefinitely. There's no point where we say that, okay, this has to turn into something, because the reality is that we are not the people who are innovating in the payment space. We're not creating a new payment products or the latest on-demand delivery product. They're the people who've got the ideas, and ideas take time to come to fruition. They also, they're like a river. They kind of, they bend, and it's not a straight line. So it takes people time to realize what is the thing that we're going to take to market. So trying to rush that artificially by saying, okay, we've let you use the sandbox up to this point, but now we need to change that relationship, doesn't kind of work. So it really happens when the company is at a point where they have made their mind up that they want to launch a product, and that's really when the conversation starts, and we start to look at, okay, when do you want to do it by? Which countries do you want to do it in? And we start to build a picture and build a relationship, because whilst the open API and the platform is the core of what we do, you have to have people relationships to make these things work. Launching payment products is not a simple thing to do. We try to make it as simple as possible, but ultimately you will know from podcasts with other companies that the ecosystem is huge.
Yeah, it's
very significant.
Yeah, indeed. It's also there are so many different systems that are tied together through mergers and acquisitions, or just various companies that need to work together. It's a huge challenge.
And part of our role here is yes, allow people to build so that they can know whether or not their product is going to work and what the user experience would be like. And I would urge everybody in whatever industry, if you're providing technology service, you're providing a platform, to move towards that model, because it's huge benefit. But the other part of it is to be the subject matter experts to help and guide people around how to launch that product and how to navigate the different stakeholders and those connections that you mentioned. Because we have a team of people who are real payment experts, who've been in the industry for a long time, and we have made mistakes along the way. So our job is to help innovators to not make those same mistakes, to guide them on the path, understand what they're trying to do.
Same pitfalls.
Exactly right. And you can't do that through API documentation and platforms. Some of that has to be through true partnership and talking, and that's as equally important to us.
Of course. Yeah. As well, your platform has been built with the idea of scalability in mind, and that it's ready to serve a new purpose that perhaps wasn't thought of at the time it was developed.
Yeah.
Have clients really surprised you with how they use your platform, and have solutions been developed that you didn't think would fit into the platform itself?
Surprised, I'm not sure I'm necessarily been surprised by some of the things that they've done. I think one of the things that has become really, really transparent and kind of and obvious to us is customers really want to be able to put their own imprint on the products that they launched with Marqeta. So we provide the core essential tools and infrastructure, but it's what they do to really be creative. So I think about things like kind of point of sale lending, which, point of sale lending, that horrific experience. If you wanted to take credit from a retailer, used to be form filling at the counter or whatever it might be. Chances of acceptance for a lot of people were very low.
Especially for the stores who already have my details somewhere in the system.
Yeah, indeed, very expensive, to the point where we have point of sale lending customers who you apply for a loan on their app. Once you're approved, you instantly issue a virtual card, tokenized into Apple Pay or Google Pay. You can go and buy the TV or whatever it is you wanted without the retailer having any clue that it was financed by a party that wasn't them. And equally and really importantly, we have customers who want to improve their lending so they can broaden the amount of people they lend to, but they need to have security and they need to have trust. And they need to use their data models to be confident that they'll get the money back. So if I was to say, I'm going to buy a TV from this retailer, customers who can go and take a photograph on their phone of what it is they're intending to buy, that triggers the loan request. And then when the transaction takes place, we send that information to our customer. And we've got customers who are geolocating to match whether or not the transaction is taking place in the location that the consumer said it is. And if it is, then that's high degree of probability that they'll get paid their money back. But if it's not, they can stop the transaction from taking place. So it's really about the real-time information that you can give to a customer that they can make decisions on that allow them to rapidly grow their business. And in that credit space, that lending space is so ripe for innovation. It's already seen significant innovation, but cards has a huge role to play. People think about cards as being this physical piece of plastic, and it has amazed me at just how many use cases there are, particularly because of virtual cards and digital wallets. That's the piece that really pushes things forward. The immediacy of being able to open an account or request a loan and to be given a payment instrument within seconds to your mobile device.
Be allocated a virtual card instantly.
Yeah. I mean, it just opens up a whole raft of new opportunity, and it's the reason why I think cards will continue to have a significant role in digital payments. So whilst there are new payment mechanisms, so more and more B2B payment, bank-to-bank payment mechanisms that are coming out and networks, the great thing about cards is that Visa and MasterCard did this amazing job of building this huge network of acceptors. So there's very few places you ever go to that doesn't accept Visa and MasterCard. So the network, the infrastructure at site already exists. Whereas for bank-to-bank payments, as an example, that's somewhat more challenging. So if I say that I'm going to pay you direct from my bank to a retailer's bank, how does the person in the store know that they've actually had a payment? So you have to build that infrastructure to let that happen. Whereas cards, it already exists. So what cards has done is said, here's the infrastructure, true global infrastructure. How do we improve the ways that the consumer interacts with that infrastructure? So through mobile, through wearable devices, etc. How do we get away from the physical plastic card for consumers who don't want to carry a physical piece of plastic, or in a scenario where I don't want a credit card account? So I just want the credit
for
to
that
buy
specific
this
purchase.
one thing. Yeah, and then once that's done, that's done. And that's
and it's
what
as well a totally different approach to risk than if you're only issuing a card for one specific purchase versus issuing cards that can be used by anybody at any point at any time.
Completely. And I think the other interesting thing on the lending side of things is previously, if you were issuing a loan to somebody, you apply for a loan, the loan's accepted, the money's put into your bank account. And then from that point onwards, the lender has absolutely no idea how you're using that money, because there's no connectivity between your bank account and them as the lender. Whereas if that's issued to a card, the lender then gets to see how that money is being spent, because they get to see the card transactions, they get to see them in real time. And that allows them to do a couple of things. Firstly, if the funds are about to be used for something other than the loan was intended, they can stop that from happening. So because no money's actually been transferred to a bank account, they can decline the transaction. Secondly, they can build up a picture of you as a consumer or as an SME to better and to improve their data models, so that if you want further lending, they've got a much better picture of you. Because if you think about it, for years, the only financial services organization that truly understood how you spent was your bank. So your bank account tied your debit card, your bank could see exactly how you were spending. So they were in prime position. That's changed now.
PSD2.
Absolutely, completely correct. So these data sets are really important in improving how lenders lend. And the key thing to me is this next generation of lenders. Yes, of course, they're in it. That they're not charitable organisations. They're there to make profit, but also at the heart of many of them, they do really want to improve lending and make it more available to more people.
Improve the user experience of the entire purchase.
Completely, yeah.
Ian, you shortly mentioned that physical card versus virtual cards, and you shortly touched upon how do you see the virtual card develop. How do you see the physical card develop over the coming years? Would it still be here 20 or 30 years down the road, or are we totally going to get rid of it?
That is a very interesting question. I don't necessarily think we'll ever truly get rid of it. I have this same question people ask me about cash, this desire to get to a complete cashless society. That largely depends on the receptiveness of individuals to new payment mechanisms. So, could I imagine my 70-year-old mother walking around using Apple Pay or Google Pay? No, quite frankly, it's easier, but I just can't imagine it. I think people grow up with using a certain payment device, and they become so embedded with it they don't want to try anything else necessarily.
But it's quite funny, because I was confronted with something just the other day that on the back of my phone I have a small rubber sticker where it allows you to put a few cards on the back of your phone, and I've got my driver's license, my public transport chip card, my credit card, and my bank card. And I came to the conclusion that I don't remember any of the codes of my credit card or my bank card, even though I carry them with me every single day. I only use Apple Pay, and I haven't used these cards for over 3 years now, but still I carry them with me every day.
Yeah, it's quite interesting. And this is a relatively embarrassing given what I do for a living, but there's quite often that I've been out with the family and we decided we need to just go and pick something up from the shop, and my wife will get out the car to walk to the shop, and I have this habit of putting the window down and shouting, "Have you got your purse with you?" And she just points to her Apple Watch like this, and I feel like, yeah, dude, this is what you do for a living. I think it's that thing where she's a little younger than I am, so maybe she's further advanced. But I think it's that the card thing is almost a fallback and a trust thing. You know for definite that thing has worked for decades, and maybe that's why we hold on to it. There's a lot of research that said it's to do with, it's something to do with the brand and it defines who you are by what card you carry. Well, it only defines who you are if you actually pull the thing out ever.
Exactly.
So it's interesting. I mean, I do exactly the same thing when really the phone will deal with everything, or the watch will deal with everything. But
and now we've spoken quite a lot about consumer cards, but of course there are corporate cards, and specifically the instant issuing of virtual cards for specific purchases. For me, that sounds like a massive opportunity for corporate cards, specifically for companies that perhaps are not used to providing corporate cards to their employees or would like to have more control on the expenditure. Do you already see a big use case for this?
Yeah, absolutely huge. I mean, one of the things that, having worked for a number of corporate organizations, one of the things that corporates don't like doing is giving people corporate cards. They're very nervous about it. And it's because typically corporate cards involve a fixed credit limit and almost no control. Whereas, if we look at what's possible now, is that if I want to go and stay on a business trip and I want to stay in XYZ hotel, let's say in Amsterdam, one of my favorite cities. So I want to stay in Amsterdam. Marqeta could just instantly issue me a virtual card that I can tokenize into my phone that will cover the cost of that hotel room and that hotel room only. That same card number can be used to guarantee the reservation with the hotel. So rather than...
And that's an issue that I always had when making reservations for business trips. I make the reservation with my own credit card, but when I'm there, I'm paying with the corporate card, and there's always a hassle. It's always a hassle.
Yeah, that's not the card we have on file. Do you have the card that we have on file? Yeah, that whole conversation.
Exactly. It doesn't mention your ID. It's horrific.
It's a whole area that I think it's a really important one. It allows companies to have more and more trust of allowing more and more people to effectively self-serve. And I think that's an interesting opportunity for people, is that we've a lot of central, because of trust and trying to manage budgets. There's been a lot of, in the travel space, you have, appointed corporate travel agents who are going to manage all of your bookings. And yes, they do it. They do a much more than just the payment piece. But ultimately, a lot of that has been to do with controlling the payment. So the payment comes centrally, and there's never a need for the business traveler to actually need to have the funds. But if you can completely restrict the use of those funds and how much funds there are, it means that you have less of a burden centrally of managing that whole piece, because you're completely in control of how funds are used, how much funds are used, where they're used, etc. So there's huge opportunity in that space. And I think, interestingly, a lot you'll see a lot of the innovation. It's already happening, but there's a lot more companies coming to market that are looking to serve the SMB, the B2B space. Consumer is still thriving, but there's a lot of people that have identified that the SME space is ripe for change.
And then let's talk about personal interest of mine. Some of the recent developments with regards to mobility, looking at the Drive Now joint venture between BMW and Daimler. Of course, Volkswagen has its own car sharing service. Sixt recently got into car sharing, but as well Lime and all those initiatives. How do you feel that virtual cards will play a part in this area? Are these already conversations that you're having, or is it something that's still developing?
I think it's still developing at the moment. I do think that the blurring of identification, payment mechanisms, how you enter certain, your entry into, whether it be a hotel room or a car, through a mobile device with payment taking place at the same time. I think this is the next evolution of this frictionless scenario, where there isn't a separate payment stream that takes place in my activity. I want to rent this car. This is the car. Somebody sends me, I make my payment on my phone. Somebody sends me a code. I go to the car, put my phone there, car opens, away I go. Same thing with, recently stayed over a hotel down in London, checked in online on my phone, get my card, digital key sent to my phone, just bypass all of that stuff, walk straight.
That's amazing.
There you go. And the reality of the situation is that at some point in the future, why not that the payment and the entrance into the room is exactly the same thing?
Yeah, exactly.
Because
why not use the same technology to open the door?
Correct. There's so much there is so much that can be done. It always comes down to whether or not what you're delivering brings real value to people. So will they use it? In our industry, there's so many people with so many ideas. Not all of them will come to fruition. It's one of the reasons, again, why having people be able to test their ideas, see how they work before they invest millions in them is a really smart play for everybody in the industry. That's why when I talk about open APIs, etc. That's why I think the more companies that do that, the more great ideas and innovations will come to market, and we'll have less of those that probably shouldn't have been invested in.
Yeah, I agree. And sharing the knowledge that you have can only bring each other forward. It never hurts anybody. And
Correct.
you also mentioned frictionless payments. Of course, strongly related to that is SCA, which will be required as of the 1st of January 2021 in most countries. How does that work on your platform?
So we built our own 3DS 2.2 certified platform. So we did that because we wanted to really give customers the best possible experience and flexibility in terms of how they interact with their consumers or their corporate customers. One of my view around SCA is that to a certain degree, it's a sledgehammer to crack a nut. And therefore the industry has had to find ways of making sure that we don't go back in time. So we create this really high friction experience. Achievable is certainly what we're bringing to market. But equally, I think at the heart of it, it's about giving consumers confidence that as more and more payments go online, that they're protected. The concern from the retailers and merchants is, asking cardholders to authenticate all the time is going to see large amounts of dropouts. People talking about 30% dropout, and that's why you have
speaking about issuing banks that already ready to implement it, which not a lot of them are.
That's correct. That is right. I mean, I think from our perspective, it's about taking advantage of the exemptions that exist in SCA. It's about giving customers the chance to say, actually, we're confident about this transaction based on all the, our data and what we've seen from this type of customer or this particular customer. We don't need you to authenticate this transaction. And I think what we'll find is that actually there won't be that much friction created, but I believe that consumers will be willing to accept that friction when it exists, because innovators are going to make that friction much less than it has been in the past. So it won't be that horrible experience where...
Yeah, perhaps in the beginning it will definitely need some getting used to. But I think as well, quite quickly, people will find workarounds or alternative ways in order to fulfill the SCA standards.
Correct. I mean, there are multiple opportunities in the SCA standards for you to avoid that friction and avoid it safely. I mean, you have to make sure that, using the exemptions, your fraud rates are low, that you're using them at the right time, and that you can report on why they've been used, all of those kind of great things. But I do agree with you, there'll be a small hump, but it's been around for a number of months already. I know that not everyone's implemented, but it's been there. It's very often, in fact, I would say the vast majority of the purchases that I make, my issuer effectively authenticates on my behalf, so I don't do anything. Obviously, you can add to your own whitelist, so you can say, if it's from this merchant, it's safe. So, yes, the industry's had to change, and we've had to. Certainly at Marqeta, we've had to do that on the basis of making sure that the tools that we build allow our customers to retain the customer experience that they're looking to give, so that we don't impose something on them where they've built this beautiful journey and then Marqeta says, oh, big ugly thing you have to do.
Let's put this in a way. I had a very interesting conversation with Spencer McLean from Marqeta about how companies can make better use of the exemptions in SCA in order to just streamline the entire process and, in fact, increase the customer experience.
Yeah, I think when you get into it, you realise that actually there's a very large proportion of transactions that would never need to be challenged.
Yeah.
But equally, in order to drive more digital payments, then there may be industries where actually authentication of every transaction is the right thing to do. So as you get higher and higher value transactions that are being pushed through, maybe authentication is the right thing to do. Maybe what consumers and corporates will demand it.
It's here. It's here to protect us.
Correct. Yeah. I mean that's the thing. That's the thing to remember when regulation first kind of gets launched in the payment industry. There is a lot of regulation. Sometimes it's hard to see past all of the things that you have to do as a business to see why it's being done. My experience is that PSD2, open banking, SCA, at the heart of those things is about trying to improve customer experience, customer confidence, increase competition. Sometimes it feels a little bit clunky. Sometimes it feels a little bit rushed. But we have to realize that in order to encourage more and more people to transact digitally, there are more things that we need to do as an industry to make that happen.
Yeah, and I always draw the comparison when GDPR was first implemented. Before, everybody was scared. It's totally going to change my business. And now it's just a given fact and everybody's working with it. Is it always the fastest, quickest, best way? Maybe not. Is it getting in the way of most processes? Definitely not.
No, completely agree. And again, at the heart of it, people wanting their data to be secure. So.
Yeah, with good reasons.
Indeed.
And then looking forward for the coming 2 to 3 years, specifically on the virtual card issuing side, what can we expect?
I think you will just see that it will pop up in more and more scenarios and more use cases. So, we've really scratched the surface. So there's no new digital bank, as an example, or kind of new lender that comes to market that doesn't have or doesn't plan to have some kind of virtual card and tokenized proposition. It's almost table stakes. You open an account with a digital bank, get a virtual card, tokenize it, then your physical card comes. But for example, in the corporate space, it just is not. I mean, the corporate card market, as an example, has barely been touched. B2B transactions have
corporates have been proven not to be that agile to adapt that quickly. They're lagging behind a bit, but they'll get it.
They are lagging behind a bit, but things will definitely change in that space. The B2B payment space has been ripe for change for a very, very long time, and in every organization I've worked for, there's always been this conversation about there's a huge opportunity to disrupt and change the way that B2B payments work. The problem was that up until probably the last 5 or 6 years, the technology really didn't exist to allow that to happen. So people were going in and saying, let's give an example of the insurance industry. Or the insurance industry makes all these payments for claims, etc. Every payments organization for the last 15 years has been going to that industry to say, okay, what can we do? What can we do? But they're bringing the same tool bag that they've been bringing for 15 or 20 years and not bringing anything different. So what you've got now is people who are tech companies that are innovating around how claims are managed, etc. And those tech companies, because of who they are and because they're relatively new, they can easily integrate with new payment options where that wasn't feasible previously. So a lot of what will drive success in terms of B2B payments is partnerships, and that's something that there's growing examples of fintechs partnering with large corporate organizations. Examples of fintechs partnering with themselves to create a new value proposition that they can then go and take and disrupt in certain markets. So I think it's literally the tip of the iceberg that's been achieved so far when it comes to innovation in payments.
Yeah, I was also thinking about, for instance, insurance companies. Why, with PSD2 and open banking, they can get a look into my bank account, into my expenditure. So why, for instance, when my TV falls off the wall and I have to submit a claim for that, they cannot link that through the API connection that I have into my bank account to the payment from that specific TV, and then link that as well together with the e-commerce website where I bought it to settle that amount as quickly as possible.
Yeah, and we were. I was on a panel a conference with one of our partners, Mambu, the core banking provider, a big office presence in Amsterdam, as you know.
Yeah, I know that.
And on that panel, it was really interesting because we were talking about open banking and the use cases for it. But open banking and access to financial transactions is just one tip of the iceberg. If you can get access to your utility bills, and as you said, insurance, more data sets you bring in, because for me, the real innovation and next great step in financial services is me being able to be hands off about my finances, me being able to say in my mobile phone, this is what I want to achieve from my finances. You just deal with it. So if I'm spending too much on my electricity to achieve my aim, you can go and scan to see if there's a better deal for me, or you can tell me that how much I'm spending this. At the moment, there's been great strides made in terms of things like saving pots and those type of things. That seems like it also almost seems like old technology now. But 10 years ago, imagine being able to do something like that, or rounding up transactions. But it is literally a tip of the iceberg, because the real next part of it is that if we as consumers and corporates can get confident enough to give more of our data to platforms and to service providers, then there's more and more that they can do to help us achieve our financial goals. And that's the area I think that's most exciting. So I'll give you the data, you make the decisions based on the inputs that I gave to you, and I will have the trust that at the end of the month or the year or whatever it might be, my financial objectives have been achieved because I've been open. Now, coming back to the earlier conversation, you can only do that if we as consumers have complete trust about the security of our data, how it's being used. So some of the regulation and things that come in are essential to allow us to get to that really innovative position of not having to manage our own finances.
Yeah, with regard to that, I had an interesting conversation with somebody from one of the biggest schemes about your physical card. Of course, that number doesn't change. So a lot of websites have your number on file, and they are requesting a verification of the validation of that number throughout the year. Why isn't there an opportunity either at the scheme or at the issuing bank to have an overview? These are all the companies, all the websites that are requesting an update on your card details, meaning they have your card number on file, so that you can as well say, okay, I don't want them to have my card details on file. He, of course, then said it's not through their platform because they're only passing along the information. But also on the issuing side, I haven't seen that value proposition come to mind. So just for me as a consumer to have an overview of these are all the websites that got your card on file.
As you say, it sounds like such an obvious thing that it makes me think somebody must have built it, but I'm not aware of who has. But see, it's as with all things, good ideas seem to be.
Think about building it, do it.
Exactly. Yeah. It's a really great point, though. We don't know what's out there. I mean, my bank would at least tell me that there's been an active card check that's taken place, so I know that it's happened. But I'm not listing all of those active card checks in a spreadsheet. So it's a good point. It really is. And MasterCard and Visa are in a good position to do that for sure.
I think so as well. But of course, there's quite a lot of responsibility there for the issuing banks.
Correct.
Ian, I've been totally re-energized by issuing. I think I've learned a lot. Thanks a lot for that. I think we've covered some very interesting topics, great insights, and to some of the possibilities that what virtual cards can offer us as a solution for both consumers and to businesses. I want to thank you very much for being on this podcast.
Pleasure. Thank
it was
you.
great having you
Yeah,
here.
it's been good. Thank
and
you.
I'm looking forward to talking again soon because I think we've been talking now for 50 minutes plus, so we're not done yet.
Oh, indeed. Still lots to be done. But thank you very much for inviting me.
You're more than welcome, Ian. Thanks a lot for being on this podcast, and let's stay in touch. The Voices in Payments podcast is an initiative launched by Payment Genes, aimed at positively impacting the payments community by educating and connecting the market with vertical-specific industry expertise. We as Payment Genes empower the industry by focusing on the fundamentals for business growth. We achieve this by providing industry-leading payments recruitment, business and data strategy consulting services. Check out paymentgenes.com for more info and please follow us on social media for more jobs, company updates, industry insights and more.